Hello traders, in this 3 video series, I will be analyzing 3 different stocks from my personal watchlist for educational purposes. Analysis will be done on 2 bases, fundamental and technical analysis. This video series is for you guys to learn the basics of fundamental analysis for selecting stocks for long-term investment and how to use technical analysis to time the investment perfectly and not to buy at the top. An important disclaimer now, the 3 stocks which we would be talking about in this video are the Jubilant Foodworks, Mahindra and Mahindra, and Amaraja batteries. So, we would be discussing about 3 important elements in these stocks. The first being the balance sheet, second being income statement, and the third being the cash flow statement. So, moving on to the income statement of Jubilant Foodworks. Now, the most impressive point about this stock lies right here, and that is the increasing market share. Now, just look at the numbers. The numbers speak for themselves. The market share has risen almost doubled, I would say, from 39.3% to close to 87.4% in the last 5 years. And this is all thanks to the youngsters wanting to live a more fast food based lifestyle wherein most of the weekends they would want to order a pizza with their friends and enjoy the weekend. And that is one of the reasons why Domino's, which is one of the franchisees which Jubilant Foodworks owns, has been performing so well. Domino's has been the go-to name for pizza in India, and it has outperformed its competitors such as Pizza Hut and Smokin' Jones in terms of the taste it provides, and that is one of the reasons why Domino's has been so successful. And again, Jubilant Foodworks is actually a company which has franchised various restaurants such as Domino's and Dunkin Donuts and has brought them to India for the Indian customers. That is exactly what Jubilant Foodworks does, in case you wanted to know. Now, another point is that the industry revenue growth is around 1.3% higher than the industry average. Again, a nice point which suggests that there is a growth potential in this firm. The net income is again close to around 4.8% higher than the industry average. Again, a very nice point to totally sum up the whole positive side of Jubilant Foodworks. Now, in income statement, we would be discussing only 2 parts: total revenue and the net income. Now, total revenue wise, the revenue has increased year on year and has been increasing consistently. So there are no whipsaws like first year increased by 500 crores and then it fell by 1000 cr and then again then increased by around 600 crores. So there is no inconsistencies in the revenue growth, which is again a very positive sign for a stock. And it has I would say increased by around 1200 cr over the past 3 to 4 years, again which is a sign of growth potential in the company. And expect that the demand for this fast food based lifestyle will continue to grow over the years as millennials and Gen Z people continue to live such a lifestyle wherein fast food is a important part of their life. Jubilant Foodworks will just continue to grow and will take over its competitors in the coming years. Net income wise, the company is in a pretty nice situation. The first year it did see a little, I'll say, fall around by 40 cr. These all figures are in crores or cr, so just keep that in mind. Now, around 40 cr it had fallen from 2016 to 2017, but after which every year it has increased, and the growth from 2017 to 2018 was more than double, and again 2018 2019 was close to double. But again, all these signs are only to prove that Jubilant Foodworks has a very high potential to grow in the coming years and is a very fundamentally stock to keep in your portfolio in the coming few years. The next point is the balance sheet. Now, moving on to the balance sheet. Now, in balance sheet, there are 2 most important aspects. First being current assets and second being the non-current liabilities. Now, current assets include stuff like the cash, the bank balance, the inventory which the company has, and most of them, like the cash and the bank balance, are a very integral part of working capital which any firm requires in order to work on a daily basis and not to run out. In case of the cash balance, right? If there are no cash in the firm, then what would happen is they would not be able to pay for the daily expenses like daily wages of the workers, or even to pay for the basic ingredients of, let's say, in case of Jubilant Foodworks, for Domino's, they would require to buy the dough and they were required to buy, let's say, the water required to knead the dough and to make it into bread and pizza sauce, other ingredients, and they have to pay for this on a daily basis because it's a food industry and they need to actually make it as fresh as possible. So the current assets need to be growing on a consistent basis, and that is what is visible in Jubilant Foodworks. Every year it has been growing, and over the past 4 years, from 2016 to 2019, it has close to quadrupled, and which again shows that the company is growing at a very fast pace, and which is again a very positive thing again, which an investor always looks into while investing in a company. In case of non-current liabilities, these include mainly the loans. Now, loans are taken by businesses to, let's say, open a new shop, to maybe renovate the shop, to spend on capital expenditure like buying new machineries which are required. In case of Jubilant Foodworks, they would require, let's say, the ovens to bake the pizza on. So all these actually factors are part of the, I would say, the non-current liabilities which are paid for by taking a loan, and hence the non-current liabilities need to be as low as possible, or else the higher the loans, the more interest the company will have to pay, and it will take away from the profits of the company. And in case of Jubilant Foodworks, the non-current liabilities have decreased year on year, and in 2019 they closed 23 crores. All the figures are in CR, so they actually are 23 crores lower than the non-current liabilities in 2016, which again shows that the company has been able to consistently pay for their non-current liabilities and reduce the debt that the company has. Again, a positive sign of growth in a company. Now, in terms of technical analysis of Jubilant Foodworks, so it is clearly visible that the stock has been in a short-term uptrend. In the 1 hour chart, you can see that the price has moved up significantly from the levels of around 1,675 and closed today at around 1896 levels. Now, the thing is that we have discussed the fundamental part of this company. Now we will be discussing about the price action of this company, Jubilant Foodworks. So, element of wick suggests supply. What does that mean? Wick is basically, if this is the candle right here, I'll show you the candlestick. So, this top part is the wick part, and this bottom part is the tail part. Now, wick suggests that there is supply. Supply means that there are sellers present at the top level. So, what really needs to take place in order for us to go long and get a better confirmation is for price to break the 1916.9, 1917 level, maybe retest this level once again, or in terms of the EMA 21, if price were to retrace close to EMA 21, show some bullish sign right there, we could go for a long-term buy. Now, there is no certain target as such. The price can move 20%, 30%, 100% also from this price. So there is no certainty as such, but for all we know, this stock is just phenomenal, and the future prospects are very bright for this stock. So 5-10 years from now, this stock would have been worth maybe 3,000, 4,000 rupees. So that is something which can be visible in this stock. Again, stop loss is a must, and according to your risk management, you should put a stop loss ideally below the swing low, so maybe around the 1850, 1820, 1830 level could be a nice stop loss. And again, if you're talking about, let's say, 100% returns from now, this is barely around 10, not even 10%. So this again suggests that the risk to reward ratio would be more than 1:10, which is really great for any investment. Now, breakout over 1920 to confirm the uptrend is needed for anyone to go long. Again, not a recommendation, just an educational point of view, this analysis of where the price could move and where the price should move before anyone should take investment.